Hi, I'm Vlad, and this channel is one of the sources when it comes to the world of crypto and finance. If you are doing crypto trading, you probably heard or maybe even encountered some very strange but systematic behavior of prices on the market. This is the work of trading bots. Our today's topic. We will talk about the idea behind such bots, what are they, why they exist, how they work, and some of the scams that exist out there. Before we start, let's define a trading bot. A trading bot is an automated program or a software that buys and sells cryptocurrencies according to the certain algorithms. In other words, it is an automated program that buys and sells crypto on your behalf. As you know, crypto market is very volatile and prices fluctuate quickly, sometimes within minutes or even seconds. In many cases, traders are unable to react that quickly once the price changes. With the number of cryptocurrencies that are on the market and different exchanges, it's nearly impossible to monitor all the opportunities that are out there manually. That's where trading bots come into the picture. They conduct and execute trades on behalf of traders. They constantly monitor data, interpret it, and execute trades within your rules on your behalf. It's like paying someone to trade for you, but according to your rules. There are different types of trading bots: indicator or signal trading bots, risk control or risk prediction trading bots, and programmable bots. Signal or indicator trading bots are created to follow the so-called trading indicators, which are basically mathematical calculations that are based on the price chart. They can help you identify signals and trends on the market. Risk control trading bots. Risk prediction is another critical aspect of a crypto trading bot. It uses market data to calculate potential risks and then decides whether to execute an order according to the rules specified. These types of bots decide whether the current situation is good or not. If it is, they make an order. Programmable trading bots. Programmable bots are programs that run on any strategy or logic that you specify. For example, you can write a simple script and let it buy a certain amount of Bitcoin every time it hits a certain price. Or you can specify a really hard logic for your bot that will rely on different strategies. In most cases, crypto bots are more efficient. They save time and are cheaper compared to the costs of hiring someone to trade. However, most trading system doesn't work when it comes to news or some big economic events. In this case, there is another type of bots called news trading bots. For example, there is a crypto bot that constantly monitors social media. Let's say Elon Musk published a Dogecoin related tweet. The bot then can execute an order in seconds. Historical strategy bots. Some bots rely on historical data to predict future prices. Some rely on indicators like trading volumes and prices. Instruments correlation bot. Another type of trading bots use two financial instruments, the price of which move in relation to each other. They follow the leading instrument, and if another instrument's price starts to deviate from the leading instrument, they open trading orders. There is another type of trading bots called crypto arbitrage bots. They are programs that run on algorithms that automatically find and identify price differences of various financial instruments on different exchanges. Sometimes same cryptos have differences in prices on different exchanges and people take advantage of this situation. For example, if you open CoinMarketCap's any cryptocurrency, you would be able to see its prices on different exchanges. Sometimes you can find a difference of 2% or 5%. Long time ago, I once saw a 14% difference for the same instrument. It usually happens due to a variety of reasons. For instance, exchanges might update their prices way too slow. So automated bots find such opportunities. They buy crypto on one exchange, transfer it to another exchange, sell this crypto and make profit. Such bots work quick enough and beat exchanges which price updates are delayed. This bot will do its job until there is no opportunity left to make profit from arbitrage. If you would like to learn more about arbitrage and how it works, we have a separate video on this channel and there is a link in the description box below. Market correlators. Market correlators are bots which main priority is to constantly monitor price differences on different exchanges. Big exchanges set up a price, and small exchanges try to follow their prices by using these bots. While I can spot them on the market, I have never seen these bots as an open software. The advantages and disadvantages of crypto trading bots. Probably the biggest advantage of trading bots would be lack of emotion. Emotions are a huge problem in trading. Human behavior is unpredictable, and sometimes it's very hard to follow your own strategy and stick to the plan of risk control. Trading bots, however, are emotionless and always stick to the algorithm based on logic. They don't have fear or greed when trading. Efficiency. Trading bots can execute your orders anytime, anywhere, quickly. Scalping and day trading is about waiting for the right moment on the market and use your reflexes and quick reaction time to execute a precise order. You might be good fit at it, but not as good as bots. Speed. This kind of relates to the previous advantage. Bots execute operations within milliseconds. The only limitations would be the API speed from the exchange platform and internet connection speed. Trading bots are multi-operational. Again, this echoes efficiency. Trading bots can execute multiple operations on different exchanges at once, which is impossible for a human. Mobility. You don't need a super setup to run a bot. A simple laptop will do. Time. It can trade 24/7 and 365 days unless you switch it off. Don't be afraid of losing opportunities. Trading bot can use them to your advantage while you actually live your life. Cons of trading bots come from bots' own limitations. For example, most trading bots are unable to react to unpredictable markets or psychology-driven markets. In most cases, news might cause drastic price changes that you weren't prepared for. The bot, however, will still continue to follow the logic specified by you. Changes. History sometimes repeats itself, but not always. Theoretically, every situation on the market is unique. Trading bots need to be constantly monitored when it comes to the market changes. Another aspect that deserves attention is scams related to trading bots. As you trade on the market, you have probably seen people trying to sell you trading bots that are too good to be real. In such situation, the most important question to ask is, if this bot can earn profit so quickly, why are they selling it to you? That doesn't make sense. It has to be scam. A guy tried to sell me these bots while providing totally unrealistic information about earnings. 20% a day or tripled deposit within 1 week sounds as funny as it does. Unbelievable. Don't get me wrong, I know traders with consistent earnings of 10% per day, and there are trading bots that are profitable and legit. But even these bots are constantly updating, and their logic is being adjusted to the market changes. As you might have guessed it already, they belong to big corporations that spend tens of millions of dollars each year in order to support such bots. And remember, profitable bots will never be a cheap software that everyone can buy. The more people use the strategy, the weaker this strategy becomes. So if one day a stranger promises you big returns, ask to transfer your crypto to an unfamiliar broker, ignore them. Don't be fooled. If you have a working strategy, you can also create a trading bot. There are multiple platforms that support programming of bots, and there are thousands of bots that have been created already. For example, CryptoHopper, 3Commas, or Hasbot. Usually, a trading bot is connected to your exchange account through the API. It's a window for your software to use features that your account on exchange platform has. If you do so, my suggestion would be to limit your API to a specific IP to access in case someone gets your API. Don't forget to set up risk control for your bot, which means that you need to specify the maximum amount of deposit you can lose per certain amount of time. For example, if your bot lost 2% within a day or accumulated losses of 10% per week, stop it for a certain amount of time, as there would be unpredictable situations on the market. And before actually using your trading bot, don't forget to test it and make sure it works well. Testing your trading bot. There are lots of testing platforms that allow you to test your trading bot according to the historical data. This can help you prove that it can work at least on the historical data, since the future is unpredictable. You can also test your trading bot on a demo account or a real-time data. The best thing about trading bots is that it can protect you from the emotional toll of trading. Because how many times were you the victim of your own emotions when trading? So if you decide to use it, my suggestion would be don't buy any trading bots, but if you get one, test it on historical data first, then real-time data with a demo account for a certain period of time. Successful trading bots exist but are hard to find. This was our video for today. If you found it useful, subscribe to this channel. I'm Vlad. See you in the next episode.